Good afternoon. This is Jonathan Satovsky, December 13th, 2018, with a video blog update. Today, I wanted to talk about in the holiday season the Federal Reserve, fears, and financial planning habits for 2019. So we'll start quickly with the Federal Reserve. Next Tuesday and Wednesday, people are expecting the Federal Reserve to have a policy meeting where they're raising rates by 0.25%. What that means is consumer and business borrowing costs may go up a bit. And the concern is that if they raise rates too quickly, it may tip our economy into recession in 2019 and 2020. So the language is likely to have a very um, immediate impact on financial markets next week, where you could see a 2,500 point move down or up in the Dow Jones Industrial Average, the equivalent of a 10% swing based on the mood of the markets and how people feel about the tenor of that commentary. So that uncertainty has created a lot of fear. Add to that trade wars and geopolitics and uncertainty around political leaders. And this week, the AAII sentiment survey has indicated that bullish sentiment has dropped to 20%, almost 18% below the historic average, while bearish sentiment has risen to close to 49%, equally almost 18% above its average. So very wide from historic patterns. In fact, the 80% of the population has a neutral to negative outlook about the future. And it's not a surprise. Empathetically, I can feel that fear in ongoing conversations with clients about the financial markets and perspective about the future. So let me give a couple financial planning tips that may help weather whatever happens, whatever uncertainty that tomorrow may bring. So there's been a lot of work done for helping people plan for retirement and live in retirement healthier lives and wealthier and more chill existences. And it's about the math of money. So this is part of financial planning and behavioral finance 101. But in retirement plans, we have an ideal plan participation rate of 90%. And people ideally contributing 8 to 10% of their salaries toward their retirement. But in reality, only 2 out of 10 people are actually participating in their retirement plans. And those that are participating are only contributing 3.5%. So our anecdotal evidence for trying to encourage people to save for their kids' education or their own retirement is fairly consistent with this. This is a daily nudge that needs to happen. To motivate people to get into better habits here. And then for a retiree, ideally, we want to be able to get them down to a 3 to 4% spending rate proportional to their assets. And the reality is many people are at 7 to 10% and higher. Well, this is important math to understand because if you're 70 years old and you're retiring and you likely have a high probability of living to 95 or a 25-year time frame, if you're spending 10% of your assets, the probability of your lasting for the next 25 years is rather slim. And it leads to a lot of speculative behavior, people trying to throw a Hail Mary in football equivalent parlance. And let's get back to the basics, blocking and tackling and the fundamentals. At least 70 to 80% should be back to the basics. And periodically you can try to throw the Hail Mary and play the lottery ticket, but if you get back to the basic fundamentals for 2019 and into good habits, you will immensely increase the probability of your success. And then whatever happens in the market, up 2,500 points, down 2,500 points, it won't impact you quite as materially. And with that, have a happy, healthy holiday season, and we look forward to a wonderful 2019.